Hey everybody, this is Jim at SP500chart.com. It is about 5:30 p.m. on July 9th, 2013. We're going to take a look at the S&P 500 chart as we do after every day's close and again over the weekend. Before we look at it, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, we're starting out looking at a 30-minute chart, and we got a few things to look at and to consider, and this is a very interesting setup. Well, I put it this way. This is a very interesting situation. We are now over this resistance line that we pointed out yesterday after the close, that we weren't over it by a technically significant margin. Today we are. Additionally, I've left this line exactly where it was yesterday, but I'm going to show you that this is still maybe open to a little interpretation. So I'm going to give this line a little bit of fuzziness, and the reason is this. These two data points are within 5 days of each other, and now here we are looking at the effect of this line about 17 to 18 days after we have these two data points. Now I want to maybe use an analogy here. If any of you guys have ever, or women, when I say guys, I don't mean that as in men. Please, that's not what I mean. I just think guys sounds better if any of you people. But let's put it this way. If any of you subscribers have shot pistols at a target range, you will know that the shorter the barrel, the shorter the sight radius. And what the sight radius is, that is the distance, essentially affected by the distance from the rear sight to the front sight on the barrel. So if you have a gun that has an 8-inch barrel, then you have 8 inches of distance roughly. Actually, you'll have a little more because your rear sight's going to be back behind the barrel. But let's say you may have 9.5 inches between your rear sight and the front sight. That means you will have more accuracy with your shot down range. Now, if you try to shoot, let's say, a little pocket gun, a little .380, or even one of those little Beretta 25s or 22s, those little Tomcats, or whatever they call them, you're talking about roughly less than a 2-inch barrel. And the front to rear sight distance on those is going to be about 2.5 inches. They're not very accurate, and the reason is because those two reference points are so close together. If you're off just the slightest bit, then as you get down range, which is what we're looking at here in the chart, you're liable to be inaccurate. So this line is not necessarily absolutely in stone, and as a matter of fact, I'm going to make it absolutely not in stone. I'm going to start with this low point here, but you can see we had this little brief candle here that took place probably on the open on the 13th of June. I'm going to split the difference on that, and I'm going to redraw this line right here. And there's another reason why I'm going to do it. And that is I'm sort of looking for the potential of an inverted head and shoulders pattern. And when I saw where we reached today, I said this level looks vaguely familiar. And if we snap a horizontal line, you'll see it is exactly where we were before the wheels came off back on the 18th of June. So we know that oftentimes with inverted head and shoulders we get horizontal necklines. I'm just doing this not because I'm telling you we have an inverted head and shoulders yet, but only because I think it makes sense to consider that we would encounter some resistance at this level, because that's where the market was before we experienced a fairly precipitous loss of approximately 90 points. Took place in, well, the latter half of the 19th. Let's call that a third of a day. 1, 2, 3. Within 3 1/3 days, the S&P had lost about 90 points. So I think this could be an area where we would expect a downturn. So with that in mind, I am kind of massaging this line just a little bit. Now, what I would absolutely love to see happen would be for us to start to back up here and come down, stay above this orange line, form a right shoulder, and then get this inverse head and shoulders pattern completed and confirmed, because that would be an eminently very, very tradable pattern. And if you don't mind, even though this is highly speculative, let's just look ahead a little bit. And see what this, if we do have a horizontal neckline, and again, that's guesswork at this point, but we can measure the height of our head to the neckline, and if it is a horizontal neckline, then we know it's going to stay the same, and any breakout that we get over this line after the potential formation of a right shoulder would be taking the S&P to approximately 1750, a little bit higher. So that's why I wanted to point that out. Again, this is very speculative. For right now, we have a couple of trend lines that I think we can keep an eye on, and I think this horizontal line is something that we should definitely consider, and the fact that we have come up to a full back test of this lower line, and like I said, I've massaged it just a little bit. Another thing that we can do is we can look back at some of these other peaks that have occurred over the past 2 weeks, and we kind of see how some of these maybe line up as well. Even though, to be honest with you, I don't really think we can call this anything of technical value back here. We probably would have to come to about this level right here. But you can see how there's generally some resistance in and around this upper line that we put that I just put on the chart. Now, just to remind you, when you're in a bullish trend, the line that tends to do the most precise tracking is the support line. When you're in a bearish trend, the line that tends to be the most precise with your tracking is the resistance line. Since we are now in a bullish trend, I would expect this line to serve as cleaner support than this line serves as resistance. But we can use this line as evidence that this 11-day uptrend, 10, 11-day upwards momentum may encounter a breather. And I think if we break this line right here, I believe that would probably be a very good indication that the S&P is getting ready to come down and to test some levels of support. And the first level of support, I believe, would be this orange line. The next level of support would be down here, right around our 1598, 1600. And if that does happen, then we would start to more strongly consider if we are seeing an inverted head and shoulders pattern develop. But you know, this looks so much like some other patterns that we've seen in the past that I'm kind of excited about it, but I don't want to let that excitement overwhelm my sense of objectivity, and I hope it doesn't overwhelm your sense of objectivity either. So let's keep an open mind. I believe this line, if we do come down and then we come back to it, that would be a great thing to have happen, because that would really put us in a position to play a move that would probably equal about 7%, about a 7% in the S&P. Am I measuring that right? If we were to get up to about 1755 from 1655, that's about 6.5%. That's a very nice figure to look at compared to what some of the things we've been dealing with here over the past number of months. So guys, there's your video for July 9th, 2013. I would be looking for this line probably as resistance. If we get over it, hey, you know, then this inverted head and shoulders may not happen, or we may have to adjust the neckline. But for right now, I would say probably the two lines that are going to be the most value to us will be this as resistance, this as support. But I think this will eventually give, and that should be setting up our move to test our orange line down here, and possibly even this line at about 1600. So guys, there's your video. Thanks for watching, and especially I want to thank those of you who are subscribers. If you're seeing this on the Tuesday afternoon, July 9th, you're a subscriber. Thank you. And if you're not, and you're seeing this over the weekend, and you're thinking to yourself, gee, I wish I'd seen that on Tuesday, July 9th, you can subscribe. It's frankly dirt cheap. It's $19.95 per month. There you go. And you get the daily video. What else can you get for $19.95 a month? That's less than a cheap cup of coffee at a fast food joint on a weekday. So just think about it. Thanks. Take care.